Hi folks, Alex Klingelhoeffer here with Exencial Wealth Advisors OKC, CFA, CFP on Twitter, joined for another weekly wrap this week by Jared Snider, my planning partner and co-host. How you doing this week, man?
I'm doing great. How are you, Alex?
Doing good. You're switching from coffee to water. Hopefully I can still bring some energy, trying to dial back the caffeine as we get into summer.
Well, that's news for me because I'm always plugged into the caffeine. I can promise you that.
Yeah, I'm trying to kick a habit. What can I say?
Yeah, well, hey, it's June, and you know, you've got a kind of mid-year's resolution there, right?
That's right. Trying to turn over a new leaf and trying to make changes. Let's not get too far off base. Let's talk about our first weekly topic. What do you have written down there for us?
Yeah, we were coming off of a really great Memorial Day weekend for travel.
Mm-hmm.
Hopefully you all were able to get out, do something fun with the family. Here in Oklahoma City, it was sort of a rain fest. We got a lot of rain.
Oh.
Feel like instead of sitting in Oklahoma City, we were in Seattle or Portland for the weekend. But, rain is good. Never going to complain about that here in the Midwest.
Yeah.
And a lot of people were getting out and about and traveling again.
We saw pool parties from Las Vegas. We saw all sorts of folks driving over the country. Really seeing, I saw an Open Table, the booking website, more than 100% above 2019 levels. Really seeing mobility data doing very well. Google Mobility now going above 100%. Of course, that's February data that we're comparing. We're not comparing May to May data. We're still somewhere 8-9% below 2019 levels as the summer goes on. Perhaps, folks, it's not this burst of enthusiasm, but I feel cautiously optimistic. Folks are starting to come out of the cave, as it were, and transition to a really nice summer.
Yeah, I mean, a lot of amusement parks are getting rid of their social distancing or changing, in a more favorable way their social distancing requirements. Maybe making some of the mask mandates just recommendations in certain parts of parks. So families headed to Disney World or headed to Universal or a Six Flags park, maybe feel a little more freedom to do that and not have some of the requirements, especially for folks that have opted for vaccination.
Well, I think we're still missing the one key thing on the travel piece, and that is we're really still missing the flying piece, right? TSA is still somewhere around 15 or 20% lower than it was in 2019. That's the piece where we're really going to see, if we ever see energy consumption get back to 2019 levels, we need to see the flying come back. We need to see the jets get back in the air. Perhaps that's business travel. Perhaps that's some more leisure travel as folks get and start traveling internationally as that vaccine really makes its way. I saw an interesting piece. Japan, where the Olympics 50 days out, still only about 2 or 3% of the entire country. That's a developed country that's still only 2 or 3% vaccinated. Where in the U.S. we have about 70% of adults that have at least a partial vaccination. Once we get the international travel, once we get the sort of domestic jets flying, I think it's all green flags going forward.
Yeah, it sounds like we're getting off to the races on the travel piece.
Yeah.
There's a lot of other things going on in the world today.
Mm-hmm.
I know something that a lot of people find interesting is just some of those wild and crazy stocks. Some people call them meme stocks.
Yeah, the Wall Street Bets crowd, AMC, of course. If you watch our morning jog every morning, I've been talking about it since last Friday, something like that. AMC keeps going up. Now it's back down. Best Buy, Bed Bath & Beyond. I think on a go-forward basis, and here's my key takeaway. Of course, we wouldn't advise a client to be in any one of these battleground names and one of these high beta, high gamma names, right? But on a go-forward basis, you're going to see more of it. You're going to see additional brands come public. Think Krispy Kreme is now coming public. And I said this earlier this week. You're going to see additional private companies with big brands that maybe aren't super profitable, maybe not getting that valuation that they want to see in the private market. Well, it's going to be the opposite of what happened back in 2011, 2010, where all of these big public brands went private. All of these private brands are going to go public because they can get a better valuation from meme stocks, from Wall Street Bets. They're going to try to hit that home run dilute their equity and try to get some dollars into these companies that may have been starving for capital for years. I think that it's just the beginning of what could be a really, really volatile period for individual names as you see additional brands. If you have the market, if you have the marketing, if you have the brand, come out and take your company public.
Yeah, it's just interesting to see all the IPOs happen with markets elevated. It's when you typically see IPOs.
Yeah.
Is whenever the market's trading at a higher price. And you can potentially, kind of cash in if you're a private company or if you're the founders of the company. It's sort of a liquidity event potentially for some of those folks who have been part of that founding company and or privately held company. If I'm the investor and I see an IPO, one of my questions is, okay, well, how committed are the management team members to sort of the long-term trajectory there for the company? Is this sort of their chance to cash out, or are they still really committed to the name on a go-forward basis?
And it's a case-by-case basis. Remember early in the year we had all the SPAC issuance.
Oh, yeah.
Right? Billions, $30 billion, $40 billion in new SPAC names back in January, February. That's dried up. You're not seeing as much of that, maybe $3 or $4 billion over the past couple months. Really, we're now seeing these really private brands go back to the IPO side. Okay, what can we do to leverage our brand recognition, maybe get some of this, I'll call it what it is, it's hot money pouring in and out of these names. How do we issue at a high, perhaps a big premium to our intrinsic value? And I think that's why a lot of times when we talk about clients with these types of names, we talk about maybe our own independent modeling, CoreVL, that one of our independent models here at Exencial. What can we use to value the cash flows and the future of the business intrinsically, and how does that relate to what the market's actually pricing? Is it overvalued? Is it undervalued? How do we get back to fundamentals, blocking and tackling, as it were, in terms of security analysis and making those recommendations?
Yeah, I mean, at the end of the day, we're investing in companies. We're investing in businesses that produce cash flows, ideally. So maybe you're sitting there and you're saying, hey, I don't know how all of this kind of fits together for me. Should I buy AMC or should I stay away from that? Is that a scary, bad thing to do? Reach out to us, drop us a note, give us a call, shoot us an email. If you're trying to think through, how an individual stock or how really anything in your investing universe kind of fits for you, give us a shout.
Yeah. One last thing I wanted to touch about before we wrap this up, one last topic is the ESG, the energy companies. We want to touch on this. Royal Dutch Shell being really monkey hammered by the courts, going to have to take 45% emission reduction. This is an oil and quite frankly a natural gas company. 45% reduction in their emissions by 2030. Exxon, 3 board seats going to an activist firm that's basically saying, hey, you guys really need to get away from producing energy, producing oil. A lot of our clients are energy executives or energy related. Tell me what's been going through your mind. What are some of the conversations you've been having about those topics? Yeah,
it's just fascinating to see what's played out there, here domestically and then in Western Europe with these two companies. There's always rampant speculation around what's going to happen with energy prices. I always tell clients, you find me an expert that has a view on what's going to happen in the energy market, and I can promise you we have some clients that would agree with them and some clients that would have the actual opposite view.
Sure.
So there's just a lot of variance, a lot of noise really on what's going to happen on commodity prices. With energy names, we know for a lot of our clients that are in the energy space, a lot of our human capital is tied up there.
Yeah.
If you're at a pharmaceutical company, I would tell you the same thing. Like a lot of your human capital is tied up in that sector. So we help our clients kind of balance that and make sure we don't get too far over our skis, having so much of our human capital and our liquid capital all tied up in sort of one basket, if you will. We just want to account for that from a whole picture risk standpoint. But is there going to be a day in the next 12 months where fossil fuels are gone? No, that's not the case, right? We know things move cyclically. Exxon's still going to be producing oil and gas probably for a good while, right? I'm going to guess Royal Dutch Shell is too. And so sometimes the pendulum swings back and forth. I don't know what's going to happen on Green New Deal or what a court in in Holland might do that might impact what a court here in the U.S. does.
Uh-huh.
Who knows? Who knows? But it's just interesting to see those developments, and I think it does speak to the fact that, look, risks are always out there, and we just have to manage them, right? The news of the day can sometimes lead us to make a knee-jerk decision. Man, let's don't do that.
Yeah.
Let's don't make knee-jerk decisions. Let's make really great decisions, really intelligent decisions around what we own and why we own it, and how it fits into a big picture plan that accounts for where you work and where your assets are held.
Real quick, I saw a note this week by Harris Kupperman. He writes a great Adventures in Capitalism blog. ESG stands for Energy Stops Growing. Does energy stop growing?
No.
I don't think so.
No.
I don't think so either.
I don't think that's the case, Alex.
I mean, you've got 2 billion people coming out of poverty in the third world. They're not going to stop driving just because we want to have a little bit of cleaner air here.
Hey, one last thought for you, and that's just around energy consumption.
Yeah.
If the U.S. is going to back off production, if Western Europe is going to back off production, but if there's still a need for production, where's it going to come from? It's probably going to come from OPEC. It's probably going to come from Russia. And it'll be interesting to see who on sort of the global playing field, who's providing those energy sources, whether they're hydrocarbon-based or renewable-based. Somebody's got to be filling that gap, and it'll be interesting to see how that plays out. We know that politics are going to have an impact. We know that supply and demand is going to have an impact, but time will tell.
Time will tell. Well, if you want additional daily updates from us, feel free to subscribe here to the Exencial Wealth Advisors YouTube channel. As always, Jared Snider, Alex Klingelhoeffer. We'll see you next time.
Take care.